Let's jump into it. It's 10:04 on the 21st of January and Wednesday morning, and whoa, what an absolute beating the dollar took yesterday. Look, basically, I think I can't remember if I did one through yesterday or not, but last video I did, so it was around this point here, and I said, look, there was two sort of viewpoints of this. If you were, let's get these alerts out of the way, it's Alert City here. Um, Two viewpoints on this was one that, if you're still thinking this has got some bullish sort of momentum to it, we were sitting around this sort of like 23% sort of pullback at the time. One thing I've noticed with DXY recently, it's almost like I call it the gap up of death, because if we get on a lower time frame, you can actually see these gaps up. Where's the open here? So if I get this out, that's just how much, well, actually, how much did it drop at its max yesterday? It dropped 0.9%. Oof. But you can see this gap up open here. And once it takes that out, bang, it just got absolutely creamed through yesterday. We saw the same thing on Monday. Basically, this opened just here, gap up, and then closed it, like sort of ate it up straight away, and bang, obviously sort of went down there. It was a little bit of a false sense of security in that, I think, because we did have that sort of Martin Luther King Day on the Monday, sort of giving us a bit of a sort of like, okay, maybe it's holding us, but of course, once the real volume came back in for the week, as you can see, obviously, it just got absolutely clobbered yesterday. So, look, it did find a little bit of support around the 61%, and this is 61% of this breakout move through here. So it's on its last line of defense down here. A couple of things as it was sort of happening, it was sort of trying to hold the 61%, and then there was a little headline that came out yesterday that this Dutch fund, who took their $100 million and went home. So like that sort of saying of the little kid that's, don't take your ball and go home. In the scheme of things, it's a drop in the ocean. I mean, 100 million is kind of like, whoa, okay. I mean, we're talking against sort of like, they took the money out of the US treasuries, citing, poor fiscal policy and all this kind of sort of garbage sort of stuff and that. And really, it's kind of like, we'll take a 100 million and piss off. Like, I don't think anybody really sort of cares. But the reaction on it was actually this was this candle here. And it was quite a steep little sort of drop down from it, like very quick. Obviously bounced back up because realistically it's not end of the world. However, I think it's because of the potential implications of what could happen should people follow suit. I think that's the unpacking of that sort of situation. But as I saw, it was down around the 61. I was trying to hold it, shot down, back up, held it again. So 61% is the sort of fib line that it is sort of holding on this pullback here. So look, I wouldn't be surprised if we do get a little bit of a drift up and a little bit of a sort of a move back up to these areas. But of course, when the point of using these sort of fib lines is to kind of determine the strength. Let's get this out of the way, the strength of conviction of a move. And obviously, with shallower pullbacks, the likelihood, because, if you think about it, this is what's happening. The buyers are here. The buyers move up. The buyers move up. The buyers move up. Buyers move up. And then all of a sudden, all the way down here. So the conviction obviously is sort of dropping a little bit, sort of hence back to the 61%. Like 61% is actually quite a sort of strong, good sort of, call it risk reward kind of sort of a pullback level. So anybody, I mean, look, dollar's been on an absolute rip, and yes, we have the Greenland situations just escalated, but it was all through yesterday because we've got Davos going on at the moment. So everybody's got a mic at the moment, and everybody's sort of firing. You're getting headlines coming back and forth and back and forth. So we've got a couple of things that have kind of just sort of like really exacerbated this move yesterday. We had obviously the Greenland situation escalating over the weekend, which basically, like sort of on top of that, is just the EU and the US tariff back and forth kind of thing. And yes, subdued. And as I just said, look, it got hammered as it sort of opened. On top of that, you've then got this Gaza peace deal thing that we're trying to sort of, Trump's trying to sort of put together, which seemingly is a positive thing in the sort of geopolitical sort of space of it all. But now Macron is sort of trying to sort of jump in the headlines, and he's sort of getting all up in arms about, sort of like he doesn't want to talk to. It's a really there's so much stuff going back. I'm only one dude, so I'm trying to sort of keep on top of it all. But just in this particular sort of situation with it all, um, it seems that sort of like Trump, Macron said sort of like he doesn't want anything to do with the peace deal sort of thing for Gaza, and Trump's then sort of fired back and said, well, if you don't want to sign the peace deal, and the reason he probably doesn't want to sign the peace deal is because of the sort of the stuff that's going on with Greenland. Um, and so then Trump's like, oh well, look, you'll sign the peace deal. We'll put 200% tariff on their wine, on their their champagne and this sort of stuff with it all. And then France has sort of fired back saying, hey, look, we're not going to be bullied sort of with threats for fiscal policy. It's like a sort of a very poorly written soap opera drama going on. And he said, she said, and oh my God, have you heard what they said back? But the market reacts to this stuff, and this is the thing that sort of has made this particularly a little bit difficult in that because that's not trading in my opinion. I mean, this is kind of like I want to look at the flows, I want to look at the price action, I want to look at the levels, and yes, we can definitely do this. But these kind of things have the ability because once you add emotion into these sort of trades, then all of a sudden, levels just get blown away and, we see sort of deeper over exaggerated moves. Anyway, okay, all that aside, we can look at the chart and sort of that's the kind of situation we're in at the moment. Davos is still going on, so there may sort of still be sort of some headlines coming out. We were supposed to get the tariff decision from the Supreme Court for the third time last night, and again, that's sort of no decision made. So that's 2 Fridays ago, last Wednesday, last night, and maybe again possibly tonight. So that's another sort of thing going on in the background. So there is a lot of stuff going on in the background at the moment. However, if we get back down to what we actually want to do here, which is the charts, we can kind of sort of see if we can pull out some levels and see what needs to be beaten to get on the top side. And sort of like, is this move basically now that we've sort of broken this level? Because we came up, we broke this, we retested here, and this is the price action you can expect once a trend line breaks. Back test, lower low, and then price punished. And the question now is, has this been punished enough? Given all that stuff that I've just garbaged on about for the last, I'm up to 7 minutes now, has the price been punished enough that we can go, okay, we're happy, boom, let's get on with it? Or are we going to, is this just a little blip, hold, and then maybe we come down even lower? Because certainly if we break these lows, look, we do have a little bit of a support here, but I would say, 97.80 is probably where you're kind of heading. Certainly if you break there, well, the game is absolutely over. That's game over for that there. I would say, just based on the sort of structure of this sort of thing, that whoops, that we're at the 61%. So the risk reward, like you got to remember, like okay, yes, we've got a couple of these sort of Greenland things, and it's all, hey, I'm going to tariff you, and then I'm going to tariff this, I'm going to tariff that, and yes, it's been hammered down like this. So, but this is a lot of sort of like fear positioning kind of stuff for it all. We've seen gold's been going through the roof. Of course, silver's still going through the roof. Equity markets, just a quick look. Equity markets also getting smacked. So it's basically the market's in a risk-off mode. It's just not picking the US dollar. That's the big point of it all. And you've got to sort of think, okay, is this, as I said, is this enough for this to go down here, or could we possibly see them go, hold on, wait, none of it's actually been implemented yet. So the EU tariff threats are, only 10 days away, but from the 1st of February, and that's for 10%. Or is it 15? I think, no, it's 10%. And then if the full purchase isn't done by June, that's an additional 15%. So that's the threat at the moment, and that's obviously caused this move down over here, but none of it's been implemented. So I do think that there's potential for this to at least have a recovery bounce up here, but I think this is going to be the tell for us because, like I always say with the three moves, we've got to move down, we've found support, we're going to move up, and then we're going to have another move down like this. So that's the course of action that I'm kind of looking for at the moment. This move, once we get this third leg here, is going to tell us, is this going down further? i.e. metals going higher, Aussie going higher, Euro going higher, or are we going to see a higher low in which we could start to see a little bit of a cap come on these things and then we start to see a bit more of a recovery? That's how we're going to see a recovery. We're not going to see, most likely, I would say about 99%, not going to see a V-shaped recovery. V-shaped recoveries, I haven't ever seen so many of them as I have last year, but not so much with the US dollar. It's been very much with like Aussies and metals and these kind of things, which you basically just close your eyes and buy. That's about it. So anyway, look, all that aside, in terms of the chart, this is where we need to get above to see some sort of move up. So can I actually do one sec? Let me pause this. Okay, screw that. Thought I might be able to just delete them all. All right, let's just whack an alert in here. 98.77. Recovery effort. This being the fact that obviously we've got buyers here. Oh, sorry, sellers there. We have buyers here. This is where we want to see it back above. This is obviously a level in which the market's been looking for. Once you get above this, then you can start to look at this as a potential support area for price to sort of then appreciate. That's your road to recovery there, I would say. Downside though, you got to expect there is obviously going to be probably at some stage, whether it comes up here and then sort of back down over here, there's going to be a test of the 61% area here. We did have a little bit of a mini zone sort of through this area here, which obviously is kind of overshot here a little bit. So this is holding here. Downside, I would say pretty much underneath this level here. You could say underneath the wick, but I would say this recovery wick here, I would say that's probably confirmation down. So 98.38. One thing it does have in its favor here is the RSI on the 4 hour is definitely oversold here and sort of pushing up. These things can stay oversold for a period, so it's not like, okay, that's the one factor was it all. But certainly if actually just looking at this really did sort of come in with a negative divergence in this, didn't it? The point is that should it get onto a little bit of a bounce, look, it's got the RSI to at least support it a little bit. So I wouldn't be surprised if we see some pairing of that move that we saw come down here yesterday, because that was quite a big smack. I mean, almost 1% down on basically headlines, and that sort of a whole idea that they're sort of selling off everything US. So it is. So it's a bit longer than I want to sort of talk about the dollar, but it's obviously the main thing at the moment. The US is going through a period in which we sort of did see last year, which is kind of like along the lines of just sell everything. The dollar's obviously getting smashed here. If we have a quick look at just equities, equities are definitely sort of on the back foot. I mean, look, in the scheme of things, yes, right near the highs, but the sort of reaction this week is obviously a negative one. So we're seeing a sell down in equities. As you can see here, shows a little bit more. All the equities sort of going down there. We're seeing obviously the dollar coming down, but the interesting thing is we're getting the breakout on yields. So yields definitely sort of popped quite hard, and typically you would expect with yields moving up in a normal scenario that the US dollar would follow suit. I think this is something that's definitely worth taking note of, that the yields are popping. This is the 10-year, and the market's still not buying the US dollar. This is what we saw last year, and we saw metals go berserk during that period. And if we have a look at what's happening now, it's also going berserk through this period here as well. So we got a big breakout there yesterday on gold. So yeah, look, I think there's room for a bounce here, but I think we're going to be entering into this sort of up here down phase. So I wouldn't be like, if you're looking to find some dollar strength here, I think there's going to be another sort of a move to attack towards the lows before there's any sort of sustained recovery. That makes sense. So we get a move up in our trade, wait for the pullback, see what the market does. If the market takes it down through here, well, that's kind of the course of action that you can look for. And then we're really looking at 97.80s, which are a very, very crucial level for the dollar. But I would say there's room for a little bit of sort of pairing of yesterday's smashing, basically. Move along. All right, cool. It's quite a long time on DXY there. We'll have a look at gold. Gold really sort of, as we saw, it jumped on that move uh, over the weekend. So as I'm just trying to catch myself up here. So we had that range all through last week. We had the quick sell down, which then got bought up very quickly in that and actually closed up inside that kind of little range that we were looking at sort of through the week there. This is obviously what we were looking for, either big candle down or big candle up. That was going to give us our direction out of this range. Obviously, it came out it came out the top side. This move did come down here, but as you can see, very quickly brought back up. And this was initially the sell down. The break came from the mention that Hassett wasn't going to be, or not that he wasn't going to be, but that Trump liked him in his position where he is. That was the headline. And Hassett's been widely tipped to be the next Fed chair based off something that Trump had said previously, where he introduced him as your next Fed chair. And everyone's like, oh, did he slip of the tongue? Trump knew what he was doing. I don't think anything this guy does isn't sort of calculated. Maybe not rational, but it's definitely calculated. I don't think he's making too many whoops, oh, I said the wrong word. That's kind of the Biden era of things. Anyway, you got the sell down, came down here. 10 minutes later, we got first mention of Greenland situation, plus Bowman sort of going on as well about how you need to have cuts sooner rather than later. Anyway, those two things combined got it back up here to close up in this range, and then gapped up on Monday, and then bang, closed out the top. So this is the move you're looking for. Big blue candle close out the top. That's what we got. Again, false sense of security, sort of with that sort of Martin Luther King Day, because we really hit this range here. As you can see, it was just bouncing back and forth, back and forth, back and forth. Above 80, below 50, they were the sort of calling. And again, you're just looking for one of these. When you get these ranges, looking for a move. And we obviously got a big break yesterday as the dollar started to get absolutely hammered. I missed the boat on this one here. I really sort of thought possibly we would have got a pullback here to shake and then go like this. Typically, gold tends to do moves more like this when it's in a range. More often than not, gold will do a fake out to one side before moving up. If you have a look on a low time frame, it kind of did. It sold down a little bit yesterday, but really, it just respected the range. It didn't do anything like a little fake out. It wasn't like a quick move down like this, i.e. this kind of move here. Here's your range, here's your fake out, and then explodes back out the other side. That's typically how gold trades ranges. So I was very surprised that this thing actually just broke and ran up here on the top. So we could have a look. Okay, obviously, yes, we've broken out. We've got a big move. We've got all-time highs. This thing's run from Saturday morning, which is when this happened. We've gone from, what are we at now? Sort of 47. So we got $230. It's just insane. From that week low to last night, that was the move there. $230, 5% in effectively 2 sessions. So a lot of profit on the table. Can start to drag these things up. If only we use this wick here. I'll start to say, okay, look, there's potential for a little bit of a support around here. Now, again, with these sort of things, it's not necessary to say you break this. It's just these trends are just to kind of determine the sort of speed. Well, not the speed, but like the sort of continuation of the move kind of thing. So obviously, hit the trend line, bounce, hit the trend line, bounce, on with the show. Once you break the trend line, then obviously price can sort of start to enter consolidation, like we saw through here, potentially and then it opens it up and we've got the levels that we can trade off. Because at the moment, it's just buy the dip. Whoop, here's a range. Whoops, here's a little resistance through here, up over the 60 or so. Downside through here is probably around 47.17 or so. So look, I wouldn't be surprised if you get a break through here. Let's go a tiny little range through this as well. So really, at the moment, obviously, we're just sort of like, it's early days. You're not getting any volumes. 12 o'clock is when we're going to get sort of China volume. If we do see a little bit of a bounce on the dollar, there is a good chance you see a little bit of cooling as the sort of money sort of rotates back out of metals into the US dollar. We are seeing a little bit of a sort of weakening with this RSI. It's only on the 30-minute though. Let's get onto a reasonable time frame for I would say that's probably your level that you're looking at here. So basically, what we could probably be looking at from this move here, it's a little course of action, was if we do happen to sort of like just not, if this doesn't just sort of rocket out the top like this, potential small range here, you break that, then potential larger range through there, and that is what's going to give us levels that we can sort of use for confirmation of continuation, confirmation for cooling off kind of thing. So, I mean, gold is really just kind of close your eyes and buy. But again, look, I mean, these things will at some stage come to a finish. But the point is at the moment and that none of the sort of the drivers, the geopolitical stuff has really abated. So there is no real reason for these things to sort of melt down. However, you can obviously intraday see some sort of some trades that are available. And these are the kind of levels we're looking for. So underneath 44, you look down to 22. Most likely, as you can see, this is a little pretty strong sort of support here. This is where people will probably be looking to get long again, 47.22, should that option appear. And this is all just given that we don't just rocket further up through this sort of trend line through here. So yeah, we'll see how we go in that. This time of the morning and that it's we haven't really got the volume in, so we can't really sort of determine what happens here. But first call is obviously through this trend. It's below 47, then look for sort of probably buy options around 47.25. Silver. Silver hasn't really sort of followed suit as much as with gold. As you can see, it obviously it got the same sort of pop on Monday. Bit of a range. It's slowly putting in new highs. So I mean, you can't knock it. It's still just underneath 96. But silver has really just outperformed gold. So it seems like at the moment gold's playing a little bit of sort of catch up with silver. But certainly at the moment it's it kind of feels a little bit not as sort of pumped up as gold. It does have a nice little, so like silver does tend to do these kind of moves where it'll find a baseline and then sort of like really just put in higher highs, or if it's going down this way, lower lows. Though typically I would expect this more as a flip of this move for a continuation through here. But certainly this is a level that would be interesting should it get popped here. So let's see. So yeah, so below sort of 92, 92.30. That would be your sort of downside potential for this thing. The fact that it's sort of making highs, you got to still acknowledge that. And obviously the buyers have moved up their bid here a little bit, but you want to see something as typical sort of silver does, where it kind of really explodes up. So as you can see here, where it took out all new high, and it was just on a very steep sort of gradient. This to me is a bit more not as committed to making the new highs. I mean, look, it could just sort of be the fact that obviously gold is running so much with it all. But this is making highs, so you can't knock it. But at the same time, it's sort of like it doesn't have the same luster that gold seems to have at the moment, which means sort of like if we do see some sort of rotation back out of gold here, and I'm saying only sort of temporary short term, I think silver would probably be a more preferred short at this stage, or at least sort of something that will sort of lead the move on the sort of downside here as well. So, but I mean, really with the metals at the moment, it's just kind of like pick your poison. I mean, they're both running to all-time highs. They're both sort of hammering. As we've seen, silver has very much outperformed gold. Now gold's playing catch up with it all. But it's not really like as in like, okay, one's better than the other one. It's just which one is the market preferring at that time. So should we see gold continue on, obviously silver's going to continue on as well. Up around here, you're really in the vicinity of getting up to 100, which is just unbelievable, the levels with that there. So even if this were to be, as I said a second ago, a short option, I would be looking even possibly down around this 90 level to sort of see market continue this thing up. Because again, this is only just going off just this last move from what, like 2 weeks ago or something like this. Um, a test of the 23% and then sort of see the market move up here again. So you can see this is where the buyers are. The buyers moved up the bid a little bit. Now the bid's up over here. Should we see this break? You should see you should see probably a couple little stops get hit, but it doesn't mean the game's over. It just sort of means that most likely you see something like this to then do this. Till you break some of these sort of more key levels of these big pullbacks, so really get down underneath, what's this, 86, it's very much still just ultra buy mode kind of sort of stuff. That's potential there, but certainly again, look like anything. If we take out the highs over here, 100 is probably the next place you're probably looking at for sort of silver. Move along, we got Aussie. Aussie fired back a little bit. It is stalling a little bit up over here. So we did get the big breakout. We sort of got that little pullback yesterday. I really thought it would have come a couple of points lower before getting this bounce, but as you can see, it was a testament to just how much the market wanted to get rid of the US dollar, and also shows what happens once these trends break. So I was looking at this descending triangle, which is very much in the idea that we're going to break down here. But I said, look, as long as we're underneath this falling resistance, that was definitely a potential play. This was our warning, and this is our confirmation. And at the moment, it's just consolidating out the top side over here. Now, if we do get a break, because obviously, you know, this is the thing. If you look at this in the sort of move reaction, we got one move up, we found resistance, we found support, we've tried to make a higher high, we haven't. Let me do it with this one. Move up, resistance, bang, bang. So at the moment, because we didn't like necessarily make a lot, like we did technically make a lower high, but more or less, you know, it's basically in the same vicinity. It's really going into a period of where we sort of look for something like this for sort of next short-term direction, because we've made basically what could be seen as a double top kind of thing in this respect of just this move. But for me, I would say this is probably more just sort of consolidating. If you break below sort of 67.20s, then okay, you look back down at sort of say 67.04, then back down into this zone over here and see what the buyers do with that there. But the fact that it's broken through this range, we start up over here, hit 78% of that sort of pullback. So that's a nice, like, sort of accelerated move off those supports. And again, this is just from Monday morning. So Aussie's very much sort of fired. It took a while to get that move down there, and it undid it in 2 sessions, or effectively almost 1 session, really, the bulk of it. But at the moment, sort of like we've sort of hit, you know, it's basically hit a double top. So now the emphasis is back on the lower side of this range, which is sort of like back around the sort of 25 zone. If we see this hold, then potentially, yes, we're looking at sort of range like this till we get a break either side of these, and then that'll give us our direction. Top side, you're probably looking to just fill that wick, so up towards 67, 66. Downside, probably looking towards 67.04, 67.05, just to sort of see what happens with the buyers at this point, or the sellers at this point here. But again, I think this will be very much determined on US dollar movement. So if we do see a bit of a sort of rally effort in the dollar, then obviously we'll be looking more likely to come down here, but it doesn't mean the dollar's like sort of recovered straight away, because all those drivers that actually got that move to happen, they're still there. So should we get a move back down to the bottom side here, even if we're looking at it in conjunction with what's happening with the dollar, you're still going to get that move there. And then that's going to be the trade that's going to tell us what's really happening. Are we just really just going to do this? Or are we going to do this and then sort of come back down to a lower side there? But I think sort of first things first, outside this box, looking at 67.66 or looking at 67.05. All right, and finally, just moving on with Aussie yen. So this thing, like all Aussie, and that was again moving up very strong at the moment. There's a lot going on with the Japanese bonds at the moment, which is going on with bonds everywhere and that, but particularly with the Japanese bonds, and they're just accelerating at an incredible pace, which is exacerbating this sort of like weakening of uh, the yen. I mean, look, for all this sort of time through here. So we are sort of getting these little sort of sell down moments. We obviously got a great trade down through here, but like with the Aussie against the US, Aussie has just opened up on Monday and just run straight back up. Really came back out, technically put in a brand new high as well. It's funny because like it did actually sort of come back, and this like it was quite a drastic kind of sell down. Obviously, there's always this talk of intervention, but this is an intervention. Intervention is kind of like, a couple of hundred points kind of thing. I think it was about 2,000 points last time. So that's kind of moved there, but certainly came out the top here, and then yen across the board sort of strengthened up. And as you can see, this really undid that move very quickly back down at to sort of 106. 106 seems to be like, although it's just a mini range through here, it certainly seems to be something that's holding quite strong. It dips under it a couple of times. It doesn't really ever kind of hold underneath it. So I think sort of like if you want to play the short side of this, it really is a close underneath 106 or a close above 106.80 to sort of see this thing move. It certainly is in ultra bullish mode, but as you can see, it is obviously a little bit more just entering a sideways period here. Is the question is with this is this a stall? And then we kind of look out the top and we're looking back towards 107, 108, which were the kind of levels Aussie was at when the BOJ did intervene. Or are we sort of going to see the yen continue to strengthen up, in which, as I said, underneath 106 will kind of be the call for it there. But at the moment, this is just mega, mega choppy. So the best thing to do, I would say, in this period is kind of sort of wait for a close outside these two areas here. All right, and yeah, I think that's pretty much it from mine.